Good morning to the Bookmap community. Welcome to the live stream. My name is Charles. I come from a community called Piratetraders where we are focused on the ES, the NQ, and how they move through the two-way auction process. So this morning we are going to be talking about the ES and what I think will be happening in the days ahead. All right. Well, obviously, we have to start this week with the caveat that probably, the market is going to be a little tough to read today because of the election tomorrow. And whatever happens with the election tomorrow will affect markets. Okay. Now, I can't tell you if Kamala wins, the markets are going to go up or down, or if Trump wins, the markets are going to go up or down. But I can tell you once it's settled, once the official decision has been made and the one side or the other has conceded the election, from that point, there will likely be a big, massive move. My guess is either way to the upside. That's just a guess at this point. I'll be using market-generated information at the time before I'm actually entering trades or risking money based on that assumption. But my opinion is, regardless of what the results are, once the results are known, the market is going to go back up to all-time highs. Okay. I think there's a lot of people who have been buying puts as a way to protect themselves from a potential sell-off based on the results for whatever reason, whichever side they like. They're worried if the other side wins, then the market's going to have this massive sell-off. And so they're hedging those bets. Well, when market makers sell a lot of puts, they also short a lot of stocks. They short the stocks, they short the indexes, they short the futures. Okay. So I think there's a lot of market makers that are short the market right now to hedge against the potential outcome of the election. So whatever happens once things are settled, and I don't necessarily think that's going to be tomorrow night, but whenever things are settled, I would expect a big move to the upside because those market makers have to unwind those hedges, right? They have to get out of all those shorts that they're in to protect the puts that they've sold. So that is the way I see it. As far as today is concerned, my guess is we're going to have a balancing day. The day that we had on Friday was what we call a balancing day. The market just went sideways, completely inside the previous day's range. Okay, so the market went nowhere. It opened and went all the way up, 50 points, and then came right back down and closed almost exactly where it opened. That is balance. That is a sign that the market doesn't really want to go anywhere. It just wants to go sideways for the day. Well, look what happened in the overnight. We just kept balancing, and now we're looking to open today. Well, I mean, we still got a half an hour before the open, but open today right around that same area where we opened and closed on Friday. Okay, so to me, that is a sign of balance. It is a sign of uncertainty and a sign that the market doesn't really want to go anywhere right now. It's waiting for more information. If I had to guess the day before a presidential election what that information is that the market is waiting for, it's probably the election. That's what people are waiting on. So my guess is that today is going to be a sort of neutral sideways day where we bounce around inside the range from last Thursday. So basically above 57.34 and below 58.07, basically within that range. That doesn't mean we can't test the high from Thursday or test the low. That is, try to get above it or try to get below it. We absolutely can. And that is where our potential money will be made today, right? If the market starts to build momentum to the upside, and we think we're heading up to test Thursday and Friday's high, there is money to be made on the way up to there. Whilst it will probably be a very choppy, grindy, slow, painful melt, there is potential to make money on the way up. And same thing with the downside. If the market starts to build momentum down and we know we're heading down to test Thursday's lows, well, then there is money to be made on the way down as well. Okay. I won't know right at the market open which of those two areas we're heading to test today. So I'm going to need to be patient. You guys, I hate it. I hate it that I'm only on Bookmap on Monday mornings, and every Monday morning we always open in a chop zone, but that's the nature of markets, right? It's a weekend. Nobody's taking on that extra risk on Friday, and so we're opening on Monday in the same place we closed on Friday. So that means we've got to give the market some time to chop around this morning. We got to let it go up and down randomly for no reason and flip and reverse randomly for no reason for probably a couple of hours to kind of exhaust anybody that just feels the need to gamble first thing in the morning, to give anybody who's a larger player that wants to position themselves, who hasn't yet. I don't know what larger player wouldn't be positioned for tomorrow yet, but if they aren't, they got to get in those positions this morning, so let them all do their thing. Let the market chop around, let it grind around. And then in an hour or two, once we start to get some clarity about what the market is doing, and we know it's heading up to test the highs or it's heading down to test the low from Thursday, well, then we have some opportunities to take some trades and make some money. Again, no matter what, I think it's going to be a grindy, choppy day. Now, let's just say I'm totally wrong. Again, I am laying out a scenario now I do not think is going to happen today. But let's say out of nowhere, the market opens and it starts to make really fast moves up or down. I would go with whatever that momentum is. Okay. There is the, very small possibility that maybe the market wants to do something very, very shocking before tomorrow to reprice all the options right before this big event. What they call event volatility happens tomorrow. There's a chance that the market makers might want to do something crazy today, move it, 100 points up or down and kind of change the value of all the different options. But I don't think that's going to happen. If it does start to happen, if the market immediately starts to get a lot of short covering or a lot of liquidation, I will go with whatever direction it's going as long as it continues to go. So I don't think that's going to happen. But I'm just letting you know, if it starts to happen and I say, okay, this is that scenario where the market is getting, aggressive move in one direction, just know I'll be trading in the direction of that move, not trying to catch the moves back. So if it starts to massively sell off, I'm not trying to go long, hoping for a move back up. I'm going to be going short with the moves down and taking profits quickly. Same thing on the way up. But again, not what I think is going to happen today. I think we're going to have a slow, grindy, choppy, balancing-y kind of day. Waiting for tomorrow. Any questions on any of that from the chat? Good morning to Laura. 3 thumbs up from the Big L. Jay is here. Good morning, pirates and traders. Willie T in the house. Good morning to you. Kevin is here. Good to see you. Trevor in the house. Good morning. Ships is here. Hola. If you have not yet, please smash that like button. This cannot be right. It says I only have 6 likes. There's no way. Okay, I refreshed. 14 likes from 76 people. Y'all, don't blame me that the market's going nowhere today. Smash that thumbs up button. Good morning to Stephen W. No questions at all from the chat. You guys are like, Charles, you nailed it. It was perfect. We don't need any other information. Debbie B in the house. Good morning to you. All right, well, real quick, normally the way we start off on Monday is we do a top-down approach, which is essentially I zoom out and I take a look at the monthly, the weekly, and the daily chart. They give me context. I use that context to carry forward throughout the week as a day trader. This week, it's kind of a waste of time because obviously whatever happens tomorrow is going to affect what happens in the days and weeks ahead. Nothing TA up to this point really matters once that election starts. So, take this with a grain of salt. But we are balancing on a monthly time frame. It does look like on a monthly time frame, we need a pullback with price. Okay. We're bouncing inside this very large channel over a very long period of time. We got close to, didn't quite make it, but we got close to the upper end of that channel. And then we got that big wick on last month's candle. That tells us we probably need a bit of a pullback. But again, doesn't really matter with the election results. But I would say the monthly looks like it's balancing to a little bit bearish. The weekly looks a little better because we could bounce right in here. If literally starting today, the market were to turn around and head back higher, that would just be horizontal balance on a weekly and no big deal. We would have tested that balance area low on Friday and we would be, on Thursday of last week, and we would be heading back up this week. So that has potential to be bullish, but it's way too early to say. We'd have to start with a couple of days of momentum this week to the upside to be able to call that. Otherwise, it looks like, again, it needs a pullback with price. And you can pretty much use last week's low as the deal or no deal level if you're thinking about the market on a weekly basis. If we stay above 57.36, then the market is likely to continue higher. If we get below 57.36, we're likely to get a pullback down towards 56.50. Okay. And then lastly, we'll jump into the daily. The daily is a bit of a mess right now, but this is all, I think, because of the election, right? I think the market has just been balancing for, the better part of a month because everyone's waiting to find out what happens with this election. So they use this move up to new all-time highs to buy some cheap puts. And now the market has pulled back in and we're just kind of waiting. We pulled back into this area we were balancing prior to that. And so now we're just going sideways in this range, which again is why I think we're going to have a sideways choppy day today. Going nowhere. We can take a look at the NQ and it's basically exactly the same thing. I was talking about this channel last week on the NQ, and I was saying that if we failed that channel area low, we were likely to get a big move to the downside. This low from Thursday isn't quite as big as I would have expected, but it's close enough. So again, I would say the NQ is just balancing, waiting for the election. Not necessarily that bearish. Good morning to Sharif, Puckertoot, Zen. What's the footprint TF? So there's no footprint charts, but there is what are called market profile charts. So what market profile is a TPO chart. TPOs is basically taking the candlesticks and turning them into letters and then smooshing them on top of each other. This helps you to see where the market spends the most time, wherever obviously there are the most letters. And then next to it is a volume profile, which basically just shows you the levels where the most volume traded. When you combine those two things together, they are market profile. When their powers combined. So that's what you're looking at is market profile software. And then over here on the right, we have the Bookmap software. This is showing us the current liquidity in the order books. So if you look up here at the top, you'll see I have the Z contract, and then I have the Z contract on this TM Lite setting. This is the Trader Map Lite, which is a free plugin that everyone gets if you have Bookmap. The reason I prefer to look at the Lite is because it filters out these market maker bots. We call them the bracketing bots, and it's pretty much just orders that sit in the order books above and below price all the time. And they're massive, large orders. And what that does is it shades out all the other orders in the order books. So it makes it hard to see where are real orders that are actually going to trade because these never trade. They never get filled. They just always move tick for tick with price, which tells you they are plugged directly into the CME servers. But anyway, we won't get into that. We're not going to get into that. Okay, we're not going to go down that rabbit hole. But they move tick for tick with price everywhere it goes, and they never get filled. So this is useless information as a trader. This is just a giant distraction. I believe it is there for the purpose of distracting computers. Basically, the day trading bots that are constantly trading the markets, they use liquidity as one of their triggers to decide what to do and when. And so I think this bot exists to throw off those other bots, but damn it, they confuse us too in the process. And that's what I use the Trader Map Lite for. So that basically just does a pretty good job of filtering that out so we can actually see where are the real orders that will fill within the order book. So I can use market profile to tell where the market is going, how much time it's spending there, how much volume it's bringing in there. And then I can use the Bookmap to see where's it likely to go next. If I see the market go lower on market profile and it runs out of volume, the volume tapers off, and then we reverse with time and we start heading back up. Okay, what's the target to the upside? Where's the liquidity? I can also see when there's bots controlling the moves versus a more natural market. Can't trust bots is long and the short of it. And I use the iceberg setting on here to see that. And then also if there's any large stops that are taken out, the stop setting on the stops and icebergs program allows me to see that. So here's an example of it right here from the pre-market this morning. You can see we had this very large, this is one person that got stopped out for 145 contracts here at the low. That is just a sign that the market might be ready to reverse and come back up. Often when the market is making a very fast, volatile move, the high or the low will be a huge order of stops. And then you figure out, oh, they were just poking down to take out those stops. So that's basically how I use what I'm seeing on the screen. This is how we do it. Ba-da-ba-ba-ba-bow. Class, good morning to you. Felipe is here. Welcome, welcome. Sook in the house. He says he wishes the election was yesterday. It'll come, believe me, it'll come. And all the chaos that comes with it. Which I will not be trying to predict whatsoever. I will not be trying to predict the outcome in terms of votes or the outcomes in terms of chaos that comes subsequently. Red Pole says, is there any way you can tell the difference between an upward or downward auction coming to an end versus the winding up for a liquidation? That's a great question. That's a really good question. So the idea is, first off, you have to understand your time frame that you operate on, right? Are you more of a day trader that's looking to sit in a trade for hours, waiting for a bigger move to happen? Are you a scalper that's just looking to get in a trade really quickly and, just make a quick buck and then look for your next opportunity? What kind of time frame are you operating on? But on a larger time frame, if you're operating a little bit slower, you use tempo, and more important even than tempo is volume. Okay. So when the market is working its way lower, let's use yesterday's high. Actually, yesterday's high was a bad example, but we'll use it anyway. Yesterday's high as an example, right? So the market is going up. It makes this huge move in the A period. Huge move in the B period. Comes all the way back down in the C to the B low, and then works its way back up again, but it can't get up above the B period high. So now what you're asking yourself is, which of these two things is happening? Is the market building up steam right now so it can keep going? Or is it getting ready to flip and reverse and come back down, right? Like, which of those two scenarios is happening? Well, what we look for first and foremost is tempo, changes in tempo. Also changes in volatility of price, and then volume. So the first clue that the momentum was coming to an end was the volume at the highs. As you can see, the higher the market went in the C period, the fewer and fewer contracts were trading. You can see how that volume tapered off less and less. That is a sign that they're running out of steam, getting ready to go down. Now, if it had pushed up there and it stayed up there and it kept bringing in more and more and more volume, and you started to see some pink candles up here near the high, that would have been the market telling you they're consolidating for that move higher, right? So the first clue that they're getting ready to flip and roll over is that taper in volume. The next thing we look for is a taper in time. We actually did not get that yesterday, which is, it doesn't always happen, but you're looking for basically something like this, what we call single prints or a selling tail at the high, right? So often when an auction is going to come to an end, it will have at least two letters or more at the high or the low. And so that's a sign that we may have run out of steam to the upside because we can't keep, make more letters up there, and we start coming back down. Okay. And then the last one is the volatility, right? So in the A and B period, the market made very large moves in one direction very quickly. In the C period, it slowed way down. Now, it did make a large move up and down, but the tempo really slowed down. By the time we got to the D period, the tempo slowed even more. The market was going at a very slow grind, and again, just inside that C period. So those are signs momentum is running out. When there's momentum, when there's excitement, when everyone's trading in one direction, the market will keep going. That excitement will continue. The more it slows down, the tighter and smaller the ranges become, the more you know the market is running out of steam. So if it's been doing nothing, if it's been going sideways, that probably means it's building for the next break, up or down. But if it's been going up and it's slowing down and running out of steam, guess what it's probably going to do next? Turn around and go down, right? So it's always contextual of what has the market been doing to this moment. And then in this moment, what's the volume? What's the, taper? What's the tempo? What's the range? Do we have good highs? Do we have good lows or not? Six minutes to market open. Any other questions for the pirate? Will, good morning to you. Red Pole says the poor high threw me off on Friday, and that is fair, right? When we talk about excess, which is two letters above the high or the low, being the definition of a good high or a good low, that used to be an incredibly powerful signal. It used to be you needed to see those two ticks of excess for the market to flip in reverse. It was very rare that you would leave behind a poor high. Over the last basically year or so, that has flipped completely. It no longer really matters. I would say it's 50-50. We leave behind poor highs and poor lows all the time now. It is very, very common because the markets are being driven by computers. Almost all the trade nowadays is computers, and computers need exact references, right? They're not emotional like us. They don't just, oh my God, I have to go short, and they push a button randomly. They have an exact beep, boop, beep, boop, an exact level where they're going to short. These are often the same levels. So we get reversals at exact same levels over and over again. You can see it with the poor high yesterday and the poor high in the overnight, both times. So it was computers that said, no more. Move to the upside. That is all you get. There and there. How good is my computer impression, by the way? That is all you get. Beep boop, beep boop. So yeah, nowadays, the way I think about poor and weak references is when I see it, I say to myself, okay, that is a data point to take into account that the market wants to come back and repair that poor high. But as soon as I start to see momentum down, I ignore it. I don't worry about it anymore. I focus on the momentum down. Whenever that momentum down runs out, well, then I can worry about the poor high again. But you really have to be fluid with the data points these days because the day trading bots, beep boop, beep boop, they are vicious. Okay, so if we were to open right this minute, which we're 4 minutes from market open, we would actually be opening with a gap down. Normally a gap down would be very bearish to see, but again, I just want to emphasize, I think today is going to be a nothing choppy sideways day. So even if we open with a small gap down, I wouldn't be overly bearish. I would be assuming the biggest move we're going to make would be to Thursday's lows. We'll even call it 57.30. That a move down to there would be about as far as they're going to go, and then they're probably going to turn around and come back up. So yeah, caution if you're expecting a big move today. I think we are going to go sideways. Good morning to Nasrin and 200 dogs in the house. Welcome, welcome. You sound like the guy from the movie Grandma's Boy. That's so funny. I love that movie. I haven't seen that in so long. How can you see me? 2 minutes to open. We've got 2 minutes to open. So I'm pulling up the NQ here. As I said, my guess is the NQ is basically going to be doing the exact same thing as the ES today. On a balancing day, they are often both just balancing. I would say the low from Thursday is very, very poor. It was a poor low on Thursday and the closing price. Geez Louise. The overnight reversed exactly there. So if we get today on the NQ below today's overnight low, this weekend's overnight low, which is around 20,070, if we get below there, there's a really good chance we're going to head down and test Thursday's low around 20,000 period. But again, same thing as the ES. My assumption would be it would just dip below there and then come right back up. So I would need to see a lot of new selling down there to get bearish beyond that. And then to the upside, I think the target would be testing Friday's high because, again, poor high. Very mechanical, the NQ the last few days. So that's around 2,290. So again, same story. My assumption is if they get above there, they'll fail and pull back in. If they do get new buying, they might go as far as the high from Thursday, but I don't think they're going to try to fill the gap from Thursday. So again, my assumption is if they take it higher or lower today, they're going to reverse and bring it right back in. The market is open. We've got the market is open now and we're in a chop zone. Okay, so we talked about the market being in balance. The market opened this morning right in between the area where it opened and closed on Friday. So this market's going nowhere. Where are you going? Nowhere. RK says, considering a XSP, I assume you mean SPX, Iron Butterfly for 11.8, I wouldn't be suggesting that because, as I said, whenever the election is done, whenever it's official and one side concedes, I think the market's going to make a huge move, and I think it's going to be to the upside. So there's a chance the market goes nowhere this week and it just kind of balances sideways. But my guess is whenever the election is settled, it's going to pop. So probably wouldn't want to be in a condor for that. But of course, I don't give trade advice. You do you, brother. An iron condor for the day today might not be a bad idea. You know, something in between 57.30 and 58.10. Like, that's not unreasonable. Again, I don't give trade advice. I'm not doing that. Stop trying to peer pressure me, guys. All right, so if you're looking for a chop zone this morning, an area where you would just step aside and let the market chop, I would say pretty much between Friday's low, right here around 57.52, and the overnight high, right here around 57.77. That is the chop zone. I think it will be very hard to predict bigger picture what's going to happen with this market whilst we are inside this area. I think it could flip and reverse multiple times and drive us nuts inside this, what I'm calling a chop zone. If we get above the overnight high and we get new buying, we can get bullish at the very least to test Friday's high and even Thursday's high, potentially on the ES. And if we get below Friday's low and we start to get new selling, we can look to test the overnight low and even Thursday's low. Okay, both of those are in play. But inside this chop zone, I think it's going to be a tricky one. So I'll be waiting for it to break out before I jump into any particular trades. If the fine people of YouTube, the 115 of you that are hanging out right now, have any final questions for the pirate, let me know, because I got to switch over to the Discord soon. And I know a lot of you won't follow. So if you've got questions, speak now or hold your peace. Any questions? Ask me questions. All right, so we are now testing Friday's low. As I said, if all we do is look below Friday's low, which we're doing as we speak, and then reverse right back up through the opening price, that will be a sign we've got more chop, more sideways, more grind ahead. Okay? If we start to spend time down here, we start to turn that low from Friday into resistance, well, then we're looking to head lower to test the overnight low at 57.39, and then these weak references at 57.34 and 57.31. So moment of truth. Can they turn yesterday's or Friday's low into resistance? Right here, right now. John D says, pull up NQ. I will. I just did, but I'll do it again for you. So NQ exactly the same as ES. Just poke below yesterday's low, Friday's low. If they can turn into resistance, they're looking to test Thursday's lows around, we could just call it 20,000. If they can't get new selling and they reverse back up through 20,090, 20,090, then it's just going to keep chopping sideways. I think it's going to chop all day long, but we may try to poke at Thursday's low first. And right now, that's what the ES is trying to do. All right, so that is new selling below Friday's low. I am bearish on the ES at the very least to test 57.40. New selling there takes us to 57.34. New selling there takes us to 57.31. I don't think they're going to go much further. But right now, it looks like they're trying to head down there and test those lows, which is bearish to see. All right, guys, thank you so very much. I will be heading over to the Bookmap Discord. Come hang out with me there. Please ask questions. If not, we will see you in the Brigade stream at 10 a.m. Thanks, guys. Bye.